Let's talk about the market update for December's data. It's out, and well, we had a steady hold on the median home price at $425,000. Again, we are down slightly from our peak back in May, but there was a steady hold. So it seems as if we might be having that correction kind of level out somewhat. If you really think about it, it's very hard to give back what was gained. If you think about inflation and the price of commodities, it is very hard for the price of something to come back down unless it's extremely inflated. That's one thing. But like, when's the last time that we've seen that like you could buy something for 50 cents anymore? It's like impossible. It just doesn't really work that way. So I think that's going to happen a little bit with the housing market. It most likely will hold on to these typical price ranges, even with the fluctuations we've had in interest rates. The good news is the interest rates are coming down, or they have been coming down. We were at like a 7.5% interest rate back in, like November practically. And starting in like December, it came down. So we're like sitting in the mid sixes now, and like really good credit with some buy downs could definitely be in the fives. So this is very optimistic, and this is getting some buyers that were kind of holding off and waiting to get back active. Of course, seasonally, we just got past the holidays, and so I think that also plays into some of this. But to have a steady hold on that median home price, that was pretty significant. So let's take a look at the median home price graph. So if you take a look, you will see this steady, up, and we peaked in May and we came down a little bit here the last few months, but we're stabling out. So that is good news. And let's look at the next graph, which is the number of homes closed. That one, you'll see the up, down. But obviously we didn't really have that happen in 2020 all the way to 2022, but we are down. Finally, that ride has ended. And so we are down with the number of closings, and it actually remained very steady between November and December. And that is also good news. We were about 1,500 closings, and at the peak we had about 3,500. So that's significant, but that just means that there was a lot of activity at one point, less activity. What is our normal? We should be, sitting in average about 2,500, I would say, closings to be in normal. So I'll be watching to see if we have that uptick, and I think we will in the month of January's data. The next graph we should look at is going to be the number of new listings, and we had less homes at the market. Well, not surprising in December. So if you look, it's normal to see these fluctuations. You have your summer, your spring, summer, and fall, and it dips down pretty much every November, December, Thanksgiving, Christmas, holidays, and it goes back up, and that's just normal. But we are at a record low on the activity of new listings. So it means people are holding on to their properties for a lot longer, and it makes sense. People the last few years got these 2.5%, 3% interest rates, so I expect to see that to be the trend. And availability. Well, homes on the market, we're not flooded. We really do not have that many homes on the market. We just have less buyers shopping right now. So it's pretty comfortable for a buyer to go out and negotiate with a seller. And so as we watch this change and see how things happen, you will notice on this graph, it was quite a roller coaster ride, and we are up in inventory, but we're not like any bit higher than like 2015, 16, 18, 19. We were already headed for lower inventory when COVID happened. And so that just really was, kind of had its toll on us. But those days are now kind of creeping away. They're going away. We're now in our new normal. And so I expect that we're going to see these interest rates kind of tick down, but I don't know how much further they're going to go. We may have some bounce backs. We just did like a small bounce back the other day. So I kind of see things stabling out a little bit. I don't think we're going to see this drop off. The only factors that could change that would be some layoffs in large sectors to have some issues with people and unemployment. So that's the one thing that I'm watching more than anything else. I really feel like there's measures in place, and obviously the Fed does not want to let anything fail. So I think we'll get another bailout no matter what. So probably going to see steady for that reason. Again, we'll watch and see. When it comes to the housing market and all the other markets, it seems like there's a safety net in place, which is knowing that they could print more money if the economy starts to go down. So I will keep a close eye on this. But in the meantime, I still am a firm believer in owning real estate. And it's not because I'm just a realtor, it's because I know for the longevity of time, it is a winner. You already have to pay somewhere to live. You should not be throwing money away. Even if you have to live a little below what your lifestyle is, you should be owning a home. If you do not, and if you have one, great. If you need a change in your circumstances, we will work through that. And we'll come up with a plan that's going to be right for you. So people buy and sell every day. The real estate market's not crashing by all means. So we're just going to keep watching and studying and paying attention so we're apprised of what's going on. So have a great day. And if you need anything, please, please, please reach out. Follow us on YouTube. Follow us on all of our activity channels that we have out there, and make it a good one.